Good evening and welcome to this session of the live coaching classes conducted by the Board of Studies of the Institute of Chartered Accountants of India. And again, nice to be here, nice to talk to you all, and greeting people who have put in their names. Of course, we have Dhyanesh, and he also reminds us that we are on the eve of Mahashivratri. So thank you, sir. And Alok Shivlani, Jyotija, good evening. Mr. Abdul, good evening, sir. And Manoj Kumar Thakur, good evening. Pranav, yes, good evening. So, Sahana Bhavatu, Sahana Bhunaktu, Sahaviryam Karvavahi, Tejasvina Vadhitamastu, Mavidvishavahi, Om Shanti, Shanti, Shanti. So, it's really great, that my student Muhammad Aslam is asking for the prayer. And I hope you got it now. That's nice. Okay, wonderful. And yesterday, or rather in the last class, we began our discussions on audit and auditors. So as people keep coming in, they keep putting good evening, good morning, some people. Samir says good morning. It's, I hope, evening now, wherever he is. And he's corrected himself. Tejas, good evening. Mohammed, again, good evening. And Vedant, good evening, sir. So, Harshit Jaiswalbi, all of you, good evening. Sushil Kumar Barik, wow, all of you are here. Wonderful. So, as you keep coming in, I may not be able to greet you. And moving on, today's topic, we saw a lot of stuff on auditors. And we came right up to appointment. We saw the appointment of first auditors, and then I think we went into appointment of subsequent auditor. Here again, we have to look at government company and other than government company. Please note that auditors are appointed in a government company by the Controller and Auditor General. The appointment is usually done by the CAG within 180 days of the commencement of the financial year. Okay, so the government companies have access and control over public funds. Therefore, the appointment of the auditor cannot be done by the board of that company or the members. So it should be selected by an independent body like the Controller and Auditor General, who have a panel of auditors, and they have certain very stringent selection criteria based on experience, number of partners, etc. And these audits are allotted. And such an auditor will hold office until conclusion of the next AGM. So remember, the first auditor will retire at the first AGM. Now, so the subsequent auditor will be appointed at the first AGM. Am I correct? First AGM, and he will hold office for a government company until the conclusion of the next AGM, which is the second AGM, right? So and so on. Every year, the government auditor of a government company will be appointed by every year. Okay. Yeah. Welcome, Kavita ji. Welcome. In the case of other than government company, it's 139(1). Other than government company, the auditor is appointed by the members at the first AGM. Remember, the first auditor is appointed by the board of directors, failing which the members. But in the case of subsequent auditors, the auditor is appointed at an AGM by the members. Later on, when you come to management and administration, unless you already finished it, the appointment of an auditor or reappointment of an auditor at an AGM is an ordinary business. It's an ordinary business. Does not need any explanatory statement. It's done every year. Adoption of accounts, appointment or reappointment of an auditor. Okay, is part of the game. Such an auditor will be appointed for 5 years at a time. Appointment period is 5 years. So he will hold office from the conclusion of first AGM till 6th. So 2, 3, 4, 5, 6. So he'll be appointed during the first AGM. He will hold office till the conclusion of the 6th AGM. 2, 4, 5, 2, 3, 4, 5, 6. 2, 3, 4, 5, 6. 5 years. Then again, he'll be reappointed at the end of this, during the 6th AGM. You will be seeing that. There's a concept of rotation of auditors and all. We'll see that. But as of now, what you need to understand is auditors are appointed for 5 years at a time. For other than government. Government, 1 year by the CAG. See, what I suggest now, in case you have any technical issues, kindly also message on the, if you have any help desk, kindly go do that also. Because there is a technical person who has to take care of that. As far as I am concerned, my screen is visible to me. So I don't know how it is coming out there. I cannot control it, is the point. Sorry about that, Kumar, Sushil Kumar. So kindly put in there. I'm sure they will correct it in case there is any problem, or inform me in case it's my problem. Is it coming correctly? Is there a lag, or is my voice coming correctly, etc.? Then from my end, I'm pushing it out. Just check that it's coming correctly there. Okay. Here's a question. Can I have an answer? 1/4 of the subscribed capital of AMC Limited was held by the government of Rajasthan. Mr. Neeraj, the chartered accountant, was appointed as an auditor of the company at the AGM held on 30th April 2021, right, by an ordinary resolution. Sanjay, a shareholder of the company, objects to the manner of appointment of Mr. Neeraj on the ground of violation of the Companies Act. Decide whether the objection of Sanjay is clear, is tenable. Thank you, Jyoti ji, for confirming that everything is clear. Thank you. So, are the objection of Sanjay tenable? Yeah. I think basically this question is whether AMC Limited is a government company. You already know the definition, either as central government or one or more state governments or combination of central government and state government hold not less than or 51% or more of the paid up capital. In this case, the government of, So no, they are not tenable. That is the correct answer. Because Sanjay is talking through his hat. He is a fool because the government of Rajasthan is holding only 1/4. There is 25%. So that doesn't make this company a government company. What is the procedure to be followed in case the central government also holds 1/3? See, I highlighted that also in red and all. In the exam, they may not highlight it. Okay, but that also is very relevant. What is the procedure to be followed in case the central government also holds 1/3 of the subscript? What is the meaning of the word? You're right, Mr. Barsadi. For first question, Sanjay's objection is not tenable because AMC Limited is not a government company. I don't say central government company. Is there only government company? There are no central government, state government companies. Government company. If you're going to be very particular about it, if all the shares are held by state government, then it's controlled by the state government like that. But we don't distinguish between central government company and state government company. It's government company. So in case central government also holds 1/3, what happens? The holding with central government and one state government together will become 58.33. 58.33. That is 25 plus 33.33. 33.33, 1/3. So central government holding 33.33. Okay. Again, note, the question is not whether Sanjay's argument is tenable now. They are asking a different question. What is the procedure to be followed? So now you have to say that since if central government also holds 1/3, then the total holding by governments, central and state, Rajasthan, will go to 58.33. Therefore, the procedure is that the Controller and Auditor General of India should appoint the auditor within 180 days of the commencement of the financial year. And the auditor so appointed will hold office until the conclusion of the next AGM. That's all. If you write this, it is enough. Yeah. Correct. Good. 58.33 recurring is the right number, but if you've written 58 also, you're not wrong. Okay, you're not wrong. This is a general provision for appointment of all auditors, both government, non-government, etc. First, subsequent, everything for all that. Okay, you have the procedure to be followed is, before appointment, the following shall be obtained from the auditor. Firstly, a written consent to such appointment, right? A written consent. A certificate from him or it that appointment, if made, will be in accordance with the conditions as may be prescribed. So there are many disqualifications, including 20 companies and all. He has to give a confirmation that if he is appointed, there will be no infringement or contravention of any of the conditions prescribed, right? And after the appointment, the company shall inform the auditor of his or its appointment. So initially, this is how, you know how it happens. They send you a letter asking if they're going to appoint, is it okay? Then you send them a certificate that if appointed, it will be in accordance. Then that's it. At which point in time, they will call the AGM, and at that AGM, they will appoint you, right? And after the appointment, that is after the AGM, they will inform you by mail or letter that you have been appointed. Once they appoint you, they will file a notice of such appointment with the registrar within 15 days of the meeting in which the auditor is appointed in form number ADT1. I'm sure you're quite familiar with the form. Maybe in your articleship, you have done it for the company, because in many cases, what happens now, we become the auditor and they don't know about ADT1, and also we also file it or call a company secretary and ask him or her to file it. Okay. They also inform you that appointment includes reappointment. So wherever the word appointment is used in this act or sections, the word appointment includes the word reappointment also. So whatever is applicable to appointment will be automatically applicable to reappointment also. Okay. So if in case you are reappointing a guy, then reappointment also you will do all this. Okay. So now the auditor should set, you know that certificate, right? A certificate about in accordance with conditions. See, so the auditor shall submit a certificate that the individual or the firm, as the case may be, is eligible for appointment. Means they continue to be members of the Institute of Chartered Accountants of India, or a firm in which majority of the members are chartered accountants holding a valid certificate of practice, right? And is not disqualified. So they are qualified, means eligible, and are not disqualified for appointment under the Act. So you should go through all the disqualifications and ensure that you are not coming under that, and then you have to use the Chartered Accountants Act. Under the Act means the Companies Act. Also under the Chartered Accountants Act. So they should not be liable to be debarred and all that. And the rules or regulations made thereafter. The proposed appointment is as per the terms provided under the Act. The proposed appointment is within the limits laid down by or under the authority of the Act, which is your 20, not including the private company, etc., etc. The list of proceedings against the auditor or audit firm or any partner of the audit firm pending with respect to professional matters of conduct as disclosed in the certificate is true and correct. See, this you will give only when there are proceedings. If there are no proceedings, you will say, no proceedings are pending against any partner, against me or any, if it's a firm, any partner of the firm. Okay. And that's it. Ideally, this fourth clause should be negative. Okay. It's not fun. It's not some sort of an achievement to put proceedings are pending. The following proceedings are pending against us. 1, 2, 3. The above proceedings against the partners of the firm pending with respect to professional matters conduct are true and correct. What nonsense. There should be nothing. Nil. Nil should be the correct answer, ideally. But if there are, then you have to disclose. See, think about it. A guy who's against whom pending disciplinary proceedings are pending, you are appointing him as auditor. What is this here? So not a good idea. But nevertheless, they want to be sure that, see what happens now when the certificate is given by the auditor, it will also be filed along with the ADT1. So the public will know that this fellow is a guy with proceeding who has been appointed as auditor of so-and-so company. Right? Good. Some are better late than never. Mr. Badrinath, welcome. Okay, etc. Excellent. Now, we are going to quickly see committees of the board here because we are going to see one important committee, which is the Audit Committee. All listed public companies and companies that are required to appoint at least 2 independent directors. Now, this is something you will not, it is not in your syllabus. 177 is not in your syllabus. But for appointment of auditors, who will select or who will review, who will recommend? For that, you should, we mentioned about Audit Committee. Therefore, you should know what is the Audit Committee. It comes in a later syllabus. It comes under powers, meetings of board and its powers, wherein you will find Audit Committee is given. Okay. But here I'm just introducing you to it, not in your syllabus. You will come across the word Audit Committee. So you will ask me, what is Audit Committee? So I'm explaining. Okay. So Audit Committee is basically a committee of the board in which independent directors will be there. 1/3 of that committee will be independent directors. The majority of the committee will be independent directors. And so they will be responsible for reviewing the financial statement, reviewing periodical financial review, setting up internal control systems, speaking to the statutory auditor and internal auditor and, sort of discussing possible risks, selecting the or recommending the internal auditor, statutory auditor, internal auditor, etc., is done by an audit committee. But not all companies have to appoint audit committee. Only listed companies and those companies that are required to appoint at least 2 independent directors shall constitute the audit committee under Rule 6 of the Companies Meetings of Board and Directors and its Powers Rules, which is not in your syllabus. So which are the companies? Where correct? Sir, hello sir, Mr. Mohammed Aslam. Same problem with Abdul you are also having. What is that 4th certificate? About what are we giving a certificate? Are we giving a certificate about the accounts? That 4th part of the certificate, is it about the accounts? Is it about the conduct, something that we have audited? Can you again, sort of apply your mind and think and tell me, what are you giving here? You are giving a list of proceedings against you or your firm. Can you not be correct about it? Seriously. Suppose there are, first of all, the answer to this question should be nil, which can be very, very accurate. Suppose 2 proceedings are there, 1 proceeding is there, you will jolly well list it. How difficult is it to be correct here? And how difficult is it to be true? Why it cannot be true and correct? Sir, only audit, you are right. See, what you have written is called the syllogistic error. It's called the fallacy of the unfinished middle. That is, your first statement is true, correct. Auditors cannot be reduced to 0, correct. But your conclusion, no. Therefore, this should be true and fair, doesn't follow. The conclusion doesn't follow from the premise. Auditors cannot be reduced to 0. I don't agree with you. But here, where is the audit risk? You are only giving a list of proceedings. You cannot give an accurate, correct list. Even there, you want to be vague. I don't know. Have you understood, Mr. Aslam? Since you are raising a question and wasting my time, I wanted to confirm that you have understood the answer. Okay. See, thinking is good, but think carefully before. This humble request. Okay, don't mistake. Okay. Companies that shall have at least 2 independent directors. Rule 4 of the Companies Appointment and Qualification of Directors Rules 2014. See, sometimes, when I react to questions by Aslam and Abdul, the intention is not to not answer the questions, but rather to help them understand how they are rushing into the question without understanding the principle involved. Now, I have absolutely no problem if they keep doing this and asking me questions and I keep answering them. It's fun. If the class will be over, I will be going away. In the exam hall, if they make the same mistake, what happens? and based on such a wrong premise, jumping into the conclusion, they write some answer, what happens? That is my greater fear as a teacher. That is why I'm again and again pointing down the fallacy of their logics. And I'm asking them, why are you in a hurry? Apply the logic thoroughly. You will get the answer. You won't have to ask me. Still, if you think there is a need for clarity, you will raise the question. That question will be a beautiful question, which I will answer to your satisfaction, and everybody will learn from it, is the point. Okay. Companies that shall have at least two. All public companies with a paid-up capital of 10 crore rupees or more. All public companies with a paid-up capital of 10 crore rupees or more. Or all or. So if any one of these conditions can trigger. All public companies having turnover of 100 crore rupees. All public companies having an aggregate outstanding loans or borrowings or debentures or deposits exceeding 50 crore rupees or more. Outstanding loans, borrowings, debentures or deposits exceeding 50 crore rupees or more. Okay. So this is the thing. Yeah. Meghnash Bharadwaj is asking a question for which actually I don't know the exact answer. Can a non-CA individual be a partner of an audit firm? See, Institute has not yet permitted CA from joining a multidisciplinary partnership. But the concept of a as of now, no. As of now. See, the Companies Act talks about this. Are you able to understand what I'm saying? The Companies Act talks about a firm in which other than CA can also be there. There they say majority should be CS, etc., etc. They are saying the institute is yet to come out with a methodology for CA to become a partner in a firm in which non-CAs are also there. But it is all on the cards. The institute may come out with a modus operandi, in which case we may be able to admit valuers, engineers, company secretary, my daughter, advocate, my son, etc., engineer, my son-in-law, everybody into the firm, and they will become partners. Still, only a CA can sign the balance sheet. Don't forget that. And the majority should be CA. Okay. So this is the answer. Let us see. All public companies with a paid-up capital of 10 crore rupees or more. All public companies having turnover of 100 crore rupees or more. All public companies having in aggregate outstanding loans or borrowings or debentures or deposits exceeding 50 crore rupees or more. Okay. So in those cases also, a listed company and these categories are required to appoint at least 2 independent directors. So these two categories, listed companies and these categories who are required to appoint at least 2 independent directors should constitute an audit committee. Why we are talking about audit committee? Because the selection and appointment of auditors of these companies, where the company is required to constitute an audit committee, then the auditor will be selected by and recommended by the audit committee. But where the company is not required to constitute an audit committee, the competent authority is the board of directors. That's all you have to understand. So that competent authority, whoever it is, audit committee or the board, shall take into consideration the qualifications and experience of the individual or the firm proposed to be considered for appointment as auditor, and whether such qualifications and experience are commensurate with the size and requirements of the company. It shall have regard to any order or pending proceeding relating to professional matters of conduct against the proposed auditor before the Institute of Chartered Accountants of India, and also it may call for such other information and all that. Okay. So if any pending proceedings are there, they may want to find out. Suppose it's a frivolous proceeding brought out by some cantankerous person, the auditor will say, sir, there is a pending proceeding, but I have fought it and almost the final order is being given, throwing it out of the thing. So there's nothing. So if the audit committee is convinced, they can. But suppose it is a huge fraud case and the fraud is almost proved, matter of institute passing it on to the criminal proceedings, then maybe you may want to relook at appointing this gentleman as your auditor or firm as your auditor, right? I cannot tell the page number now for obvious reasons, because I do not have the board. I do not have the board of studies material with me, and I will not be able to tell. You just keep searching around. If it is not there, you don't study this. What do you say? If it is not there, why? If it is not in the institute material, don't study this. That's easier now. Just leave it. Don't bother to study it. So please don't ask me to do this comparative study of my slides with Board of Studies material, because I'm not, as you know, I'm not following the Board of Studies material order. I don't have the Board of Studies material with me. I also humbly suggest you don't keep that book in your hand and follow my lecture. Humble suggestion. Aram se listen to my lecture, allow it to flow, take notes if you want, intelligently think. Then later on, this slide is going to be given to you. You do slide by slide, you do with the page comparison. What do you say? If something is there and not there in the Board Studies material, leave it. Don't study. Leave it. It is not important. Okay. See, already somebody is telling 10.4 page number 9. 10.4 page number 9. Go. Now you go and take it. Okay. Please. Why I'm not able to help you now? You're wasting time for me. I have to continue with the topic. I can't go around searching Board of Directors material and telling you which page it is and all. What do you say? Okay. Government company can be without. It is Muhammad Aslam. It is given in the first page of material, like that is telling. It is on page 10.4 in study material. Manoj Kumar Thakur. Wow. So anyway, next time if somebody wants page number, others can help him. Those who are having the Board of Studies material and juggling the pages and arriving at the correct page, please inform your colleague, friend who doesn't know where the page is. Common company can be without auditor at some point of time. If AGM is held before the appointment of new auditor by CAG, within 180 days of commencement of... See, you will have to apply your common sense again, Abdul. Government companies are controlled by the government. Some ministries are there, etc., etc. So in those cases, they will extend the time. They will extend the time for holding the AGM itself till such time the new auditor is to be appointed. So they have their own procedure for all that. Don't worry about that. The law has prescribed 180 days. Suppose within 180 days you are unable to do it, your AGM has to be held, obviously now 6 months. So then you will go to the ministry. Ministry will coordinate with the MCA. Then as a special case, MCA will pass a special order giving extension. All that is possible. So in those cases, the central government has enough power to take care of it. So you don't have to break your head about it. But to answer your question, no company can be without auditor at any point of time. Are you able to understand? Somebody or the other should be there. If the new fellow is not come, till the new guy comes, the old guy will continue. Okay? Got it? Sir, Aslam, you do whatever you want, but don't put it in the query pad. What you are doing, don't put it in the query pad. Okay? If you are not reading study material, I'm happy. If you are writing, I'm even more happier. See, what you people should understand is, listen to what I'm saying rather than interrupt me with all these comments and ask questions which are relevant. Okay. Okay. Now, see, NFRA we already saw. Just for information, I'm putting it here. Companies to which NFRA rules are applicable. Okay. Companies with securities listed companies, unlisted public companies, paid up capital greater than or equal to 500 crore, annual turnover 1,000, outstanding loans filed. We already saw this. Special companies, we already saw this list. NFRA applicable companies. Okay. Now, the point is, if NFRA is applicable to you, the National Financial Authority rules are applicable to you, then such a company, every existing body corporate, other than a company governed by NFRA rules, that is, which are not governed by NFRA rules, got it? Shall inform the NFRA within 30 days of commencement of the NFRA rules, inform NFRA 1 the particulars of the auditor as on the date of commencement of the NFRA rules. If you are not covered, you report in NFRA 1 that you are not covered within 30 days of commencement. Every existing body corporate. They use the word body corporate. Indian company also included. Foreign companies which are having, you saw now, that is why they use the word body corporate. A body corporate incorporated outside India, which is a subsidiary. That is why they use the word body corporate. So they have to inform the NFRA. Every body corporate other than a company as defined in clause 22, that is foreign company, formed in India. And so for other than foreign company, all other companies formed in India and governed under NFRA rules shall within 15 days of appointment of an auditor under subsection 1 of section 139, inform the NFRA, inform NFRA 1. The idea is they want to know for sure who are all claiming that NFRA is not applicable to them. Just want to check. Then that's it, you guys get out. But if NFRA is applicable to you, then within 15 days of appointment of an auditor, you have to inform the National Financial Reporting Authority. See, the idea is they will have a master list of auditors. Remember, one of the jobs of the NFRA is to monitor auditors as to whether they are performing their job correctly and all. So they might take up one or two of these published accounts and check up if there is a compliance with Ind AS and all. And in case it is not there, they will haul up the auditor and find out what is happening. Have you not seen this? Like that, they will ask. Okay. Prachi Kapoor is asking a perennial question whether form numbers are relevant. No, not necessary. But suppose they ask you a procedural question. If you write the form number, you will get more marks. Okay. So should I remember? I think it's good to remember. But if you are unable to remember, then leave it. That because of that, nothing much will happen. Try to remember naturally if you can. Otherwise, no problem. But there is no one single right or wrong answer for this. If I tell Prachi Kapoor that it is not important, immediately Muhammad Aslam will say, no, I am remembering all that, sir. I am writing it down and remembering it. He is also correct. Okay. Suppose I say it is important you study, then Prachi herself will say, I don't have time for that. Then I will say, don't study. Like that, keep on confusing. So my humble suggestion is, if you can remember, try to remember, it is valuable. It can be an icing on the cake. Okay, that's the point. And in many cases, form numbers have the simple alphanumeric thing. So generally, you can remember it. That's the point. See, some of them are very important, like MGT 17, and things. They're very important. Where you can remember them. That's the point. Now we come to the term of an auditor. We saw that normally the auditor would be appointed for a term of 5 years minimum. For other than government company, 5 years. So listed companies, so normally 5 years you can keep on reappointing him perennially. But certain companies cannot appoint or reappoint beyond 1 or 2 terms as the case may be. That is compulsory rotation of auditors. Listed companies and other prescribed class or classes of companies, except 1-person company and small company, shall not appoint or reappoint an individual for more than 1 term of 5 consecutive years. So the individual auditor can be appointed only for 5 years or reappointed only for 5 years. At the expiry of 5 years, he cannot be again reappointed. Got it? Only 1 term. An audit firm can be appointed or reappointed as auditor only for 2 terms. So he can be, that is why they use the word appoint or reappoint. Individual cannot be reappointed. Now, he is appointed once, that's it. No question of reappointment. Later, after the 5 years is over, cooling period is over, you will see that. Once the cooling period is over, he can be again reappointed. But before the cooling period, he cannot be reappointed. Once 5 years is over, there is a cooling period. This is not applicable to all companies. This is applicable only to listed companies and certain other prescribed, high net worth, high turnover companies. Filing of NFRA 1 is the responsibility of the company, not why auditor. Why should auditor do this? It is the responsibility of the company. Why auditor? Nothing. Auditor, nothing. I have to simply give my consent and wait. It's you who have to file ADT 1 also. See, ADT 1 also only company should file. Okay. Notice of appointment of auditor. Because it is your duty to appoint an auditor. Your duty means company's duty. You have appointed me. Now you go inform the ROC that you have done your duty. That's all. Later on, if they want to talk to me, they know how to get hold of me. I'll talk to them. No problem. Yeah. So, coming to the point, so they can be appointed only for one term of 5 consecutive years and as auditor for more than 2 terms of 5 consecutive years. Dhyanish, what if common partner is there in 2 firms? Can you elaborate the question? I'm not able to understand what your question, where your question is heading. Can you give me a more detailed query so that I can answer? What if there are common partners? The audit firm can be appointed only for 2 terms. Even what do you mean by common? Where is the common partner? Are you able to understand where I'm not able to understand your question. There is an audit firm. You appointed that firm for 5 years. Now you can again reappoint for another 5 years, 2 terms. At the end of the 10th year, you cannot reappoint them. Individual, 1 term of 5 consecutive years. That's all. Here I am unable to see the common partner concept, though there is something to do with common partners, but here I do not see what your query is. If I am able to see, I will answer it. I am not able to see it. If an individual auditor is appointed as first auditor of company, then he cannot be appointed for 5 years period as subsequent auditor. No. See, the first auditor is an exception. He will be holding office for the first year. He will retire at the conclusion of the first AGM. Now, at that first AGM, the members can appoint him for first 5 years. First 5 years. Thereafter, he can, if it's an individual, that's it. 5 years. Of firm, 2 terms. That's all. First auditor don't include. Otherwise, no first auditor can ever be re-elected. So nobody will be first auditor. Okay? No. First auditor will hold office till the conclusion of the first AGM. Now, at that first AGM, you will appoint. This is exactly what I taught you here. See, you are not following when I am teaching, but you are asking question. That's the beauty of Abdul. See, you already appointed the first auditor. First auditor is holding office till the conclusion of the first AGM. At the first AGM, you are appointing him for 5 years. That 5 years is the limit. If it's a company to which this rotation of auditor applies, that first auditor appointed for 5 years, now beyond that he cannot be appointed. Got it? Yeah, you'll be seeing it. Maybe Dhyanish Ingli is jumping the gun. Patience, little more patience. This point, if that's what you're talking about, I'll come to that a little later, about common partners and all. Don't jump the gun. I will come to that at a particular point. I will teach you about common partners. Yeah, I will come to it. I myself will give example the way you are giving. ABC and AYZ are 2 firms. A is common partner. ABC was appointed for 2 terms. And thereafter can AYZ be appointed for 2 terms. What do you think? See, I am that type of stupid teacher, no? I will not give answers. I will ask you to give your view. Sometimes I will do that. I'm that type of stupid teacher who cannot answer questions. Instead, he will ask you that question again and find out what you think. What do you think? Since you asked that question, what is your view? See, your question is there. There may be right answer, wrong answer. I will give it. I may not know it. That's different. But what do you think? Should that firm be appointed or not? That firm where A is, see, he is a partner of ABC, 2 terms over. Now he is also a partner in AYZ. Can you appoint AYZ? What do you think? Very beautifully. Now the clarity has emerged in your question. Still, I'm not answering your question. Rather, I'm asking, what do you think? No, I think no. Correct. Let us see. No, let us see. This question will be answered very shortly, but let us see. Okay. Now, rotation of auditors will apply not only to listed companies, but also these companies. Obviously, where there are high turnover and all. All unlisted public companies having paid up share capital of rupees 10 crore or more. In fact, we have 2 such companies where the paid up share capital is more than 10 crores and there is a rotation of auditor. All private limited companies having paid up share capital of rupees 50 crore or more. All companies having paid up share capital of below threshold limit. In fact, the B category is where we have 1 and A category is where we only have 1. All companies having paid up share capital of below threshold limit mentioned in A and B above. So they are below 10 or 50 as the case may be, but they have public borrowings from financial institutions, banks, public deposits of 50 crore or more. In all these cases, OPC and small companies are excluded because small company limits are now higher. So even then, small companies are excluded. Okay. Fantastic. Even then, I don't see, because small company, now the even new limit is 40 crore. So it's only more than private company. Small company means private company. Paid up share more than 50. So it will not be a small company. Am I correct? Anyway, I may be wrong. I think I'm. See, small company 40 crore, paid up capital 40 crore. Whereas this fellow, private company, small company is a private company. So here we are saying 50 crore or more. Automatically it will move out of the small company category. Na? That is good. But remember, that small company definition, one important point is there. What is that? Remember, it may have a paid up capital of 50 crore or more, but still it may be a small company. Am I correct? Because two conditions are to be satisfied at the same time. Both the paid up capital condition and the sales condition should be satisfied simultaneously. And so it is quite possible for the private limited company to have 50 crore and more and still be a small company because its turnover is less than 400 crore. Are you able to understand? So it is quite possible for a private company to have a paid up share capital of 50 crore or more and still be a small company and get the exemption, because it may have a turnover less than 400 crore. And the word used there is and. If you don't know or believe me or you look up that definition, you will see what I'm saying. What is that? As higher as may be prescribed it not exceeding 100 crores. What is that? Yeah, the word and is used. Yeah, below threshold means, see, we are prescribing 10 crores for unlisted public company, right? And we are prescribing 50 crore for private company, which is not a small company or a one-person company, right? In these two cases, if these companies have a paid up share capital below this threshold, means entry limit of 10 crore or 50 crore. So any company which is an unlisted public company, which is having less than 10 crore paid up capital, in spite of that, they will come in this category of rotation of auditor if they have public borrowings from financial institutions, banks, public deposits of rupees 50 crore or more. Got it, sir? Mr. Barsadi? Similarly for private companies. So threshold means the criteria. Threshold limit means the basic criteria, the minimum limit. Once they cross the threshold, see, threshold, since you are very particular, small paid up capital is less than 4 crore turnover and 40 crore. No? Oh, I'm so sorry. For not 40 and 400, 4 and 40. Sorry. See, thank you, PhD. Thank you. So that will be very difficult. Okay, sorry. So it will be definitely, once it crosses 4 crore turnover, automatically it will become a thing. And turnover 40 crore. This is 4 crore. So once it crosses 4 crore, it will automatically go for public company. So once it cannot be a private company having paid up capital of 50 crore or more and be a small company is a good point. Now look at it. Suppose it has a paid up capital of 50 crore, sir. Sorry for that mistake. I'm sorry, it's my mistake. 4 crore turnover, 4 crore paid up capital and 40 crore turnover. Agreed. Now, whatever it is, I'm looking at a situation where the paid up capital is more than the limit, but the turnover is less than the limit. In that case, even if you are coming under 50 crore category, paid up capital, you would still be a small company, is what I'm saying. Good. Okay. The crucial word is and. That is what I want you to remember. The crucial word in small companies definition is and. Okay. That is all I'm trying to do. Thank you for correcting me. Good. Very alert. Thank you. See, you know what? These things, the small company limit, all that stuff, it's easy to forget it and very difficult to remember it, right? It keeps on slipping. So what I generally used to do, whenever I come across this type of limits, gimmits, blah, 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 I have a small notebook where I will take it separately and write it as a note. It's more like a cheat sheet. We call it CHEAT, cheat, SHWT sheet. So keep it. So I'll keep it with me, and whenever I'm free, I'll keep on going through it. Form numbers, limits, just briefly. I won't do the whole thing. So whenever I'm free, I'll keep going through it. So that, I'll keep revising it. So that it will become reinforced in my mind from the exam. This is one technique I used to use. Okay. I used to use it. And that way I used to have a better chance of remembering it. I used to do the same thing for income tax also. Because income tax also, there are a lot of limits, deadlines, due dates, blah, blah, blah. So I used to have a cheat sheet, small book, you can carry with me, where I will keep it and I will refer to it. Whenever I'm free, sitting idle, I will go through that. But today you will never be idle. No, you are all having Instagram, ChatGPT, all sorts of ways to occupy your time. Those days, we were only, either we could do something else or read. So we were reading. Okay. So, an individual auditor who has completed his term, that is one term of 5 consecutive auditor, shall not be eligible for reappointment as auditor in the same company for 5 years from the completion of his term. So that is called cooling off period. Okay. So, an audit firm which has completed its term, that is 2 terms of 5 consecutive years, shall not be eligible for reappointment as auditor in the same company for 5 years from the completion of such term. So 5 years and 2 years. 5 years you cannot. Cooling period is 5 years. Out of the 5 years, again the same company can be reappointed as the auditor. Okay. Now you come to your common partner point. Now I'm going to. Yeah. So, sir, it is not a cheat book. It is called a cheat sheet. Of course, it's small. Even you can, instead of using a small book, sometimes I used to use cue cards. Cue cards are available. Cue cards are small rectangular pieces of paper wherein 1 point can be written 1 point. Then keep on revising it. It works for me. That way I will keep on. Whenever I feel bored sitting somewhere, sometimes income tax office, I'll be sitting idle. Use it. While traveling, I'll be sitting in. So audit firm having a common partner or partners to the other audit firm whose tenure has expired in a company immediately preceding the financial year shall not be appointed as auditor of the same company for a period of 5 years. So now we have an answer for ABC, AYZ question. So let us superimpose Dhanesh's question. ABC and AYZ are 2 firms. A is a common partner. ABC was appointed for 2 terms. Thereafter, can AYZ be appointed for 2 terms? No. 2 terms, no. They cannot be appointed for 5 years. After 5 years, you can either reappoint ABC or you can reappoint AYZ. But you cannot appoint them immediately after ABC's term, 2 or 1 term has completed, tenure has expired. You cannot appoint another firm with a common partner. So I hope now your question is answered, Mr. Dhanesh. Okay, I know I'm going to come here. I thought since I'm going to teach it at one point in time, I thought at that time I will give the answer. Okay. Here is a question from the exam. Ram, Rahim, and Robert. Okay. And Co. is a form of CA. This will further reinforce. 3 partners with Ram, Rahim, and Robert. Robert is a common partner in Robert Associates. Ram Rahim was appointed for Rainbow Detergents for 2 consecutive 5 years, 2016 to 26. Now the company wants to appoint futuristic story, 26. They want to appoint Robert Associates. No, they cannot do so. They cannot do so. Okay, same as ABC, AYZ. Okay, you have given a better example. ABC, AYZ, common partner A. If ABC is finished 2 terms, AYZ cannot be appointed for 5 years. After 5 years, you can appoint ABC, AYZ, anybody you want to get. After the cooling off period is over. Lemon and Company Chartered Accountants, a limited liability partnership firm with CAM and N. Lemon is the LMN, M&N is the statutory auditor of a listed company, Mrs. Big Limited. for past 6 years as on 1/4/2021. CAM is also a CAM, sorry, not CAM. CAM, Chartered Accountant M, is also a partner in another CA firm, Dew and Company Chartered Accountants. Advice under the provisions of the Companies Act, up to how many years can Lemon and Company continue as statutory auditors of Messrs. Big Limited? Lemon has been holding for 6 years. That is 6 years how first year and then till the 6th AGM, right? So now can I reappoint Lemon? They can be reappointed for 6 years. We have to include first year. First year plus 5, 6 on 1/4/2021. Now you can appoint for another 5 years. Okay, that's all. That will be 2 terms. What shall be the cooling off period for Lemon and Company? 5 years. Can Dew be appointed as statutory auditors of Messrs. Big Limited and its another listed subsidiary, Dark Limited? It cannot be appointed in Big, but it can be appointed in Dark. Can Lemon and Company be appointed as internal auditors of Messrs. Big Limited and its another listed subsidiary, Dark Limited? Lemon and Company will see that. I'm just giving this explanation. That is the first year. That is again, Abdul is getting everything. First year, then 5 years. It's not given here, but that's how it's 6 years. Okay. And then another 5 years you can appoint. Then cooling off for another 5 years. Is the point. Because in the first place, they cannot hold office for 6 years continuously. That is the clue. You cannot appoint them for 6 years continuously. And nobody will appoint for 1 year. See, that's why logic, again, Abdul will never understand logic. See, first year is appointed only 1, then 5. Then again, see, nobody will appoint him for 5 and then 1. Or 1 and then 5. Unless that first year, that 1 is the first year. Then 5, 6. 1 plus 5, 6. No, another 5. So totally 11 years you can be. Okay. And then you have to cool off for another 5 years. Okay. Cooling period for the Lemon is 5 years. Dew cannot be appointed in Big because of common partner like CAM. But they can be appointed in Dark. Dark Limited. No prohibition on appointment in the subsidiary. Similarly, no prohibition on appointment as internal auditors in the subsidiary or even in that company. They can be appointed. Lemon can be appointed. Okay. He can continue his tenure till the conclusion of the 6th AGM. Then at the 6th AGM, Lemon and Co. can be appointed for another 5 years from 21. Okay, then they can continue for 5 years. After that, they cannot. They have to take a cooling off period of 5 years. Okay. No due. What does that mean? Okay. No due. No. Due, no. Correct. Okay. See, fourth point I have not taught. I'm just telling you, just listen to me. There is this cooling off period is only for statutory audit. This cooling off period is only for appointment or reappointment of that person as the auditor of the company. There is no prohibition for appointing him as or that firm as internal auditor. That is what I mean. So to answer this question, the fourth is they can be appointed. Lemon and Company can be appointed as internal auditor of Big, and also it's another listed subsidiary, Dark. Sir, let us look at the standard, sir. You are appointing an individual for 5 years. 5 years. He will be holding office as auditor for 5 years. At the conclusion of that 5th AGM, if he is an individual, then that's it. You cannot reappoint him for another 5 years. Another 5 years, you cannot reappoint him. Are you able to understand this? This is called cooling period. Similarly, for a firm, they give slight exception. They are saying they can be reappointed for 2 consecutive periods of 5 years. So 5 years, then another 5 years. On the expiry of that 5 year, 2 terms of 5 consecutive years, you cannot appoint that firm or a firm with any common partner for 5 years from the completion of its term. Got it? I hope I have communicated this point. It's called cooling period. During the cooling period, he cannot be appointed as auditor of this company. Only this company, its subsidiary, he can be appointed. Or holding company, he can be appointed. Why cooling period is necessary? Whether it affects the independence of cooling period is not there. See, again, this all comes out of your so-called Enron and Satyam. Enron and Satyam together have created all this. They feel that if the same man or the same firm is the auditor continuously, then some kind of familiarity threat is there. That is, they become too close to the management so that there may be an independence threat, they feel. So to avoid that, they say, let there be rotation. But in my humble view, you are giving 10 years, Baba. 10 whole years. So in the 10 years, don't you think fag end of the 10 years, these fellows will have a familiarity? At least 7, 8, 9, 10, 4 years, they will have familiarity now. So they should have 3 years at a time. 3 years they should rotate. Like that, if they do, then it will be good. And so one more thing, think about it. For listed companies of a certain category, only the big 4 will audit. So it will be like in the flying trapeze. One fellow will go, another fellow will come, one fellow will go, another fellow. Keep on rotating between them, 4 people. Automatically, there's a familiarity threat. One more thing. See, suppose Deloitte wants the audit and they are not willing to compromise. E&Y is willing to compromise. They'll get the audit. So Deloitte will say, no, we'll also compromise. I'm not saying they will. I'm saying that's how Pricewaterhouse did. So I'm not really able to see this as a method of removing the familiarity threat. But the basic purpose of this provision is to remove or to reduce the independence threat of, shall we say, independence issue arising due to familiarity. If you become too close to the management, you will oblige. This is the fear that the MCA has. So you should be cut, and they should be. I'll tell you one thing. Most audit firms, you know what they do? The management of that company will come back and say, sir, you are our advisor. We need you. Therefore, kindly become internal auditor. And immediately they will transfer the audit to a known firm recommended by this guy. Where there will be no common partners. So seriously, I'm telling you, this is only as usual, MCA's fond belief that amendment to the legislature will bring about change. So I hope I have answered your question on cooling period. They can be appointed for 5 years and then cooling period of if it's a firm, they can be appointed for 5 plus 5, 10 years and then cooling period of 5 years. Got it, Varshaji? Firm, 2 term hai. Individual, sirf 1 term hai. 1 term, 5 years. 2 term, 5 plus 5, 10 years. Got it? After that, cooling. Then 5 years baad, again you appoint this fellow. You can. Another 10 years. That firm get 10 years. Okay, 5 plus 5. If 2 audit firms with 1 common partner is rotated after 5 years, each one, by this way, no need to deal with cooling period because it is written that after expiry of 2 terms, firm with common partner cannot be appointed. Sorry. If 2 audit firms with 1 common partner is rotated, what do you mean? Only 1 rotated? No, sir. There are 2 audit firms with common partner. After 5 years, okay, you appoint this fellow, that fellow. This fellow would have had a 5-year cooling period. So they'll be having continuous cooling period of 5 years. Okay, do it. That is what if they want that and you want it, enjoy. Who can prevent you from doing it? A, B and C is chartered accountant firm and B and C is common partner. B and C plural are common partners at another CA firm. But when A is fraudulent in one company, then company is appointed B. And C's common partners from if A is a partner in one firm, B and C are in another firm, that firm is not tainted by A's malpractice. Okay, whereas this firm, where A, B and C are there together, that firm cannot. It will not be qualified because of that. But the other firm where only B and C are there, no problem. Okay. A is not there. No, so there is no tainting. There is no connection. A is here. No? Only B and C are there. Not a problem. Like that, these are all the way you escape and run. Lemon and Co can be appointed as internal auditor. Thank you, Ms. Priyanka, for your nice views that Lemon and Company can be appointed. So, sir, after 5 years of cooling period, they can be removed. Definitely. Obviously, they'll be waiting, tongue like that to come and sit again. And in the meantime, these 5 years also, they'll be around only. Don't worry. They'll be doing internal audit, consulting services, blah, blah, blah. They'll be around. They won't go anywhere. They'll be very much there. Because the client cannot leave this auditor. Yeah. See, the relationship between a client and an auditor goes beyond that. So, ethical behavior is something you build into your DNA, not into the statute. So that is something only we at the institute can do. Merely because I'm close to the client doesn't mean that I will do unethical things for them. Please understand. Being close to the client is one thing. Doing unethical things for them is another. Okay. That is the point. Somebody can be close advisor to a corporate. They may need people like that. Because, see, think about it. A guy who's been with that company for 10 years, 5 years, more than that. Before this amendment came, there had been auditors who had been auditor for 35 years, 40 years. We were auditors for a company for 35 years. Suddenly we had to go rotation. So we introduce another firm who is known to us and say, hey, please do this audit and all that. Blah. Nothing. We have not influenced them to do anything wrong. So hey, please do this audit. In the meantime, we continued as internal auditor, advisor, blah, everything we will do. We will be the same fees, anything, no reduction in fees, double fee, no. Client pays double fee. One fee for the statutory audit. Then they will pay us the old statutory audit fee plus something to keep us happy and keep us there also. I seriously don't see this thing. Of course, that is the view of a practicing CA and not the view of a bureaucrat of the Ministry of Corporate Affairs. Whether this has been successful, I don't see it. What they should do, they should take a panel of peer-reviewed firms and they should say even large listed companies should appoint joint audits of peer-reviewed firms. So where only one multinational firm was doing the audit, they should say 3 large peer-reviewed firms should be with 6 partners, 7 partners. Meaning they can prescribe all the criteria. And SEBI can monitor it and say listed. That way what happens now, if the big 4 firm or some other large firm is continuing to do some nonsense, the new firm coming in will have no vested interest to protect them. Unlike a multinational firm peer who will have some interest to protect them, this new guy will not, these 2 guys will have no need to protect them. So they will come and they'll give all the information. And so the chances are we can have better, thing there. And this reverse also. Multinational firm, if it is taking over from a thing, they will also be. So that way there will be a continuous monitoring of auditor. It's a concept. It is in practice, it is impossible. Yeah. Familiarity will be there. How you can prevent familiarity, you tell me. Correct. The answer for question 4 is yes, they can be appointed as internal auditors. Correct. This is a good question. Whether, see, I am the auditor for the holding company. My firm is the auditor for holding company. Can I also be the auditor for subsidiary? Definitely. Why not? Who can prevent? So long as it's within the 20 limit, absolutely no problem. Why not? Anyway, I'm going to sign the consolidated financial statement. So why not the subsidiary also? No problem. Enjoy. Okay. ABC and Co is an audit firm having partners A, B, and C. Mr. A, B, and C are holding appointment on 4, 6, and 10 companies. Provide the maximum number of audits remaining in the name of ABC and Company. See, each partner can have 20. So they are holding appointment in 4 and 10. Covered under this 20. There are no exceptions. Then, totally as a firm, in the name of ABC and Company, it is 4, 6, and 10. That means what? 30 is their eligibility. A, B, C together 30. Whereas they have taken 20. Another 10 available. A alone 6. B alone 4. C alone nothing. Only 10. Only 0. Because already, sorry. A alone. So totally 4 plus 6, 10 plus 10, 20. Together they can audit 20 into 3, 60. 60. So 40 can be done. So 4, that means 16 for A, 14 for B, and 10 for C. 40. Correct. Absolutely correct. 40. 40, not 30, sorry. 20 now. 20 into 360 minus 20, 40. Individually, 16, 14, 10. Okay. Fantastic. Now, in case the Act was amended now, then they say every company existing on or before the commencement of this Act, which happened in 2014. 13, it was not commenced. The Act, though enacted in 13, was enforced. This section came into force in 14. So every company existing on or before the commencement of this Act, which is required to comply with the provisions of the 20 audit limit is on the firm and also the individual partner. Okay. There is firm together and individual partner. Individual partner 20. So you have to ensure that the individual partner does not exceed 20. Okay. 20 is on partner and not on firm. 20. So the point is that that firm can take up to 60 audits. Out of that, A can do 20, B can do 20, C can do 20. So any company which is existing, which has to comply with the schooling of provision and rotation and all, should comply with those provisions within a period which should not be later than the date of the first AGM of the company held within the limit of 70 section 96, after 3 years from the date of commencement of this Act. See what happened when the Act was proposed to be notified, all companies got really troubled. They said, hello, you are suddenly telling remove this auditor, bring a new auditor. Because in all cases, they would have completed more than 10 years now. So as I told you, we had totally 4 eligible companies in our total audit list. Our firm had 4 eligible companies. For rotation was there. In all the cases, we have been more than 20 years. In one case, more than 30 years, we have been the auditor. Suddenly, they are telling you. So, in fact, these companies also did not know that there is a rotation. They are blissful. We told them, boss, we cannot be auditors because of this. What do you mean, Srikanth? It's not possible, sir. You have to do like that. Sir, how can I do that? Violation of law. No, do something. Why am I telling you? So we all went and said, hey. So they said, okay, not immediately. We'll give you 3 years. So the Act has commenced. Then the first AGM held. Okay, you count 3 AGMs, 3 years. So at the 3rd year, you have to change. After 3 years from the date of the commencement of this Act, the first AGM held, you have to take it. Okay. So commencement date you take, then 3 years. Then after that, the AGM where you're going to be appointed, you have to be. So 3 years breathing time was given to the auditor and also to the company to do something about it. Okay, it's a good thing. Based on that, there is a calculation in the institute material now. There is one calculation which is now completed, expired. You understand that those dates are no longer relevant. So what they will do is they would have given that table in the Board of Studies material based on that circular. Kindly go through it. That is not relevant for the exam point of view because that period is now over. With 23, 22, I think almost all companies would have come out of that. Some of them this year, they will get, the cooling period will be over and they'll be getting reappointed. The cooling period also will be over. Madam, the Act came into force in June of 2014. So AGM of 2014, you are already holding office for more than 5 plus 5, 10 years, suppose. So that firm, immediately you have to change the auditor and put somebody else. That took a lot of emotion. So companies and all went, CII went, they begged the Confederation of Indian Industry. They said, it's not possible like this. Give us some time. So the Ministry of Corporate Affairs said, take 3 years. So from the date of commencement of the Act, June or July, whatever, the 2014, you count 14, 15, 16, 17. So 2017 AGM, you have to change. You have to ensure that this guy goes out and a new guy comes. That new guy can hold office for 5 years. Firm. Individual also 5 years. At the expiry of 5 years, you may not reappoint the new guy. You can appoint the old guy himself because his cooling period is over now. So 17 that would have happened, right? 18, 19, 20, 21, 22. So 22 would have been the fifth year. So that fifth year, so in the 23 AGM, all those guys would now get, will now change and the old guy will come back in. And the company also will be eagerly waiting for 5 years. So they will also say, sir, next year you are coming, sir, next year you are coming, sir, like that they will say. So we will all go. Again, from 23, what happens in that old firm, which was sent out, they waited for 5 years now. Now they can come in 23, means 24, 25, 26, 27, 28. 5 years over. Again, another 29, 30, 31, 32, 33. Up to 33, these fellows can go on. 10 years. So, are you able to understand it? Now at least. Prachi? I am doing my best to explain in simple way, but I don't know. Maybe I am very clear. Prachi, have you understood? So Act came into force in 14. So in that year, they said you do. The company said no. Then the ministry said take 3 years. So 14. So 15, 16, 17. 3 years got over. Na? Then 17 compulsorily they had to change. So 18, 19, 20, 21, 22. 5 years. So with that, schooling period is over for that old guy. Na? So he can be again reappointed. That old guy can again come in for first appointment 5 years. Na? So 22 it will be done. 23 he will be reappointed. 24, 25, 26, 27, 28. 5 years. In 28 what we will do? Another 5 years. 29, 30, 31, 32, 33. After 33 again another 5 years of schooling. For a firm. For an individual it will be 5 years. You have to keep on changing. Okay. In previous act, what was the provision for first auditor? See, in previous act, this appointment by members was not there. No, it was there as it is. The board has to appoint within 30 days. If they don't do that, the members have to appoint. If the members do not appoint, violation. So, okay. Thank you, Ms. Prachi, for confirming. Thank you. Now, so this example that I gave now, you will find it in the form of a working out in the Board of Studies material, which is nothing but the circular given by the ministry at that time. Depending, see, for example, in some cases, they may not have completed 10 years. There could be a case where you have completed only 3 years. So you will have 3 plus the balance period. You understand? So 3 plus the balance period, like that. Suppose I have completed only 7 years, so I get another 3 plus 3. So it will keep pushing, and then only that date will come for reappointment. So they gave you 3. But if I see in my case, I have completed 10. So 0 plus 3. Whereas if you complete only 7, you still have 3 more years to go now. So 3 plus 3, 6 years you will get. Suppose you complete only 2 years, you can go for another 3 years now, like that. Got it? Or in the case of a firm, you only completed 2, you can go another 8 years, like that. Okay. These 2 tables are very simple. I'm not teaching it because it's not relevant now, but still if you want, it is very clear. Once you understand 3 years, they get. If you have completed 10, then balance is 0, 0 plus 3. If you have completed 1, then balance is like that, you have to calculate and push. For a firm and individual. For a firm, it will be 10. For an individual, it will be 5. Rotation of auditors provisions are there in almost all developed countries. That is why they have included it here. Okay. They are there. But that is applicable only for listed companies. Here they are making it applicable to unlisted companies also. Okay. The unlisted companies, they are not bothered there. Here they want even unlisted companies to be covered. See, Ministry of Corporate Affairs loves to irritate CS, make life miserable for us. Mischievously, they will do things. They enjoy it. They enjoy it. If they can make life bad for us, they will do it. Because as far as they are concerned, post Satyam or even before that, auditors are all frauds. They are there only to make fraudulent signing of balance sheets. In the morning, auditors will wake up and plan what fraud can I do today. Like that only we will think according to the Ministry of Corporate Affairs. So all the law they will make about us will be stringent. Whereas the company secretaries are all serving the society. They are golden people. So they'll keep on giving them more and more benefits, making them, whatever audit they want, they will give like that. But for us, shoot on site. I don't know why it's like that. We are the stepchild and they are the favored child. Sorry, I'm also a company secretary, but I'm not a practicing company secretary. My daughter is also not a practicing company secretary. She is employee of a company. Okay. Now, please see the highlighted word there. Members of a company may resolve to provide that. Please see the highlighted word there. May. It's not compulsory. They want, they can provide that in the audit firm appointed by them. The auditing partner and his team shall be audited at such intervals. Are you able to understand? Suppose the auditing firm has 12 partners. They can say every 3 years during the tenure, you have to change your partner. The new partner should audit. That way, this will especially be there when the company is a multinational company. They may have such a policy coming down from their foreign counterpart. So such a company will say the auditing partner should be rotated. So, but that is not compulsory. It's only provided as a kind of a option. Or they can say that the audit shall be conducted by more than one auditor, joint audit. Okay. So the members may say, hey, don't have one, have two. So joint auditor. See, I am a fan of joint audit. You know why? Because joint audit automatically results in a kind of peer review. Automatically. Especially for certain large listed companies. I strongly feel listed companies themselves should be broken up into size. And you should select the top layer or top -1 layer and make a joint auditor applicable to them. And say that there should be more than one auditor to audit it jointly. Okay. Now, by definition, what will happen? The audit fee will go up. But they will also select mid-sized firms which are having the capability, which the costs are less. So the quotation can be lower. And they can come in and learn also. See, how will a mid-sized firm ever learn how to conduct a large audit unless they do it? So that opportunity should be given. The large firm being there would act as a sort of an automatic peer review. Like that we can continue. See, these are all meaningful ways of promoting the profession and also ensuring peer review and rotation. This is my view, not the views of the Institute of Chartered Accountants of India or the SARC or wherever I am member. It's purely a view expressed by a member of the institute. Okay. Yeah, maximum of 60 audits for lifetime of an audit company. Why do you ask this question? You feel that it should be increased as the firm grows? I don't know. Yeah, you can. No. Sir, 60 is based on number of partners, Baba. Per partner, 20. If you want to increase the number of partners. Have 15 partners into 20, 300 audits. Enjoy. Who's preventing you, sir? No, I think you got confused. That 60 number is not for the firm. It is based on 3 partners into 20, 60. If suppose there are 10 partners, 10 into 20, 200, like that. Got it? For the firm. Then individually you have to see 20. Are you able to understand, Mr. Vedant Vara? So, in the case of rotation of auditor, the audit committee shall recommend the incoming auditor to the board. If no audit committee is there, the board shall recommend to the AGM. Okay, incoming auditor. In the case of, for the purpose of rotation, in the case of an auditor, the period for which the individual of the firm has held office as auditor prior to the commencement of this act shall be taken into account for calculating 5 or 10. This is what I meant. If I have already completed. So the incoming auditor or audit firm shall not be eligible if such auditor or audit firm is associated with the outgoing auditor or audit firm under the same network of audit firms. Please note, common, shall we say, logo. So, for example, there may be a firm, okay, Mannar and Company, CAs, Chartered Accountant, Manaran Company, Chartered Accountant. Now, Manaran Company may be a branded network. So that Manaran Company network may have another firm in the same network. Sorry, that network also cannot be appointed. Okay. So if there's another firm associated in the network of Manaran Co. Now that network firm also cannot be appointed. Only 3 partners, then 20 hai na? So 20 into 3, 60. Why are you confusing yourself, Mr. Aslam? You can confuse yourself in the corner of your room. Come back and attend the class. Don't confuse in the query pad. Okay. For the purpose of rotation of auditors, a break in the term for a continuous period of 5 years shall be considered as fulfilling the requirement of rotation. Okay. If a partner who is in charge of an audit firm and also certifies the financial statement of the company retires from the said firm and joins another firm of chartered accountants, such other firm shall also be ineligible to be appointed for a period of 5 years. Okay. See, but this A point, if you are having any doubt, even I am having a similar doubt. See, it's simple. If ABC firm has been appointed for 5 years, after 5 years, they cannot be appointed for another 5 years. You understand? Agreed. Suppose at the end of the 3rd year, they resign. Then for 1 year, somebody else is auditing. Then again, they can be reappointed. But again, they can be reappointed only for 5 years. Got it? So, at any time they can be. So this 1 year in between they can give to somebody and come back. But I have not seen any firm do this. That is, you push somebody in for 1 year and then push him out. But one problem is, think about it. If this is what they are trying to say, that will be wrong. Because, see, suppose the firm has been an auditor for 3 years. At the end of the 3rd year, they are saying, we'll go. We'll take a break for 1 year. How can they come in again? Because once they have finished 3 years, they go, they can't be appointed for 5 years. But I think the meaning here is they are there for 3 years. They go 1 year later, this one man is appointed, other man is appointed. Then 1 year later, they come back again. Then they can be appointed for another 5 years. Like that. But that's I have not seen any firm do that. Okay. That is what I'm telling Mr. Aslam. Your confusion, let it be with you. Don't bring it into the query pad. See, this is a B is also very important. Partner who is in charge of the audit firm certifies the financial statements of the company. Then he retires, joins another firm. Such other firm can also be not appointed for 5 years. Okay, simply partner flying trapeze. He'll be partner here. Then, have you seen the flying trapeze in the circus? He'll be standing there. Suddenly he'll come, leave that bar, cross over, go to the other bar, go to the side. All that is fine in the circus, but that should not be tried in the audit firm. And again, that will not encourage anything, because if he does that also, that new firm where he is going and joining cannot get the firm. That way, it will be putting offer for the new firm. So better not go there and deny them the opportunity. Yes. So we have seen the provisions relating to, what shall I say? Appointment of auditors, right? Which is quite interesting. As usual, we'll have a break at 7:45. Not now. 7:45 break. Wonderful. Moving on. We now move on to, we see appointment. Now we are going to move on to, shall we say, removal, retirement, like that. Right? So we will begin with what is known as casual vacancy. Casual vacancy. Casual vacancy means unexpectedly that fellow has to go. So casual vacancy may be due to resignation, maybe due to death, maybe due to incapacity, all that. So something happens, or he may, you saw that now. If any of the disqualifications are acquired by him, then immediately he will vacate. And that will be treated as a casual vacancy. Got it? So that is the meaning of the word casual vacancy. before completion of 5 years, if audit firm is removed by the company, then that firm is reappointed or not? Good question. My answer is no. If they have been removed, all the more they cannot be reappointed. If they have been removed, one, they cannot be, even if you want to reappoint them, you cannot reappoint them for 5 years. Only after 5 years, cooling period, you can reappoint them. This is my view. Okay. Casual vacancy, government company, other than government company. Government company, no problem, because who appointed him in the first place? CAG. So once this fellow dies or becomes mad or incurs a disqualification or resigns, you inform CAG. Yeah. So in case you inform the CAG should appoint within 30 days. In case they do not, then the board of directors can appoint within the next 30 days. That's all. Matter over. But that's a rare case. When an auditor of a common company is resigning, that will come in the press. Think about it. So imagine, why would he resign? After taking up the audit of a government company, if he is resigning, something serious. Okay, is the point. Similarly, other than government company, in case that casual vacancy is due to resignation, it's a special category. If it is due to resignation, then the approval of members is required at a general meeting convened within 3 months of recommendation by board. So the minute there is a casual vacancy in the post of auditor, the board of directors has to convene an EGM, extraordinary general meeting, within 3 months. At that general meeting, the members should appoint, because vacancy by resignation is a dangerous thing. See, when the auditor is resigning, it's a serious issue. So the members have the right to meet and ask the directors, why is this gentleman resigning? We know he is a nice man. He is honorable and honest. If he is resigning, there must be some reason like that. So also you'll see later on, when an auditor resigns, he should file a return with the registrar explaining why he is resigning. So in case he feels that the financial affairs of the company are mismanaged or they are not correct, he can inform the MCA. So remember, resignation of an auditor is very dangerous. Unless, it's a planned resignation. In some cases, what happens now, he might have been appointed in the AGM, but he may not like the way things, whatever it is, the company may not want. So instead of removing him, they'll say, sir, you resign. Sir, we are not getting along. Yeah, I also don't want. Then what to do, sir? We have discovered another firm. They are willing to do it. Like, they are able to do it. Are you having any issue? No issue. Go. Then he will resign. No problem. In which case, he will also be very careful. When he is uploading his return, he will say, I am resigning due to personal reasons or prior professional commitments. Thank you, blah. And he will run away. And then the new guy will get appointed using the same format and come. It happens regularly. Okay. In case of any other than due to resignation, casual vacancy, other than due to resignation, the board of directors can appoint that auditor to replace him in a board meeting. Okay, within 30 days. Right? Got it? I have some questions here. Some of you can help me. Will that new auditor hold office for 5 years or the remaining period of his guy? For example, if he's filling one guy who is appointed for 5 years, that fellow has completed 4 years. Now, will this fellow, the new guy, hold for 1 year or for another 5 years? I have no answer. Okay. Of course, I can say 5 years because that is favorable. There is no prohibition. So the new guy, casual vacancy, you can appoint him for another 5 years. That's my view. Again, you could have a different view. Yeah. So don't jump. Okay. When I'm coming there, I will teach. Aslam, what are you trying to do here? Are you educating me? Yeah. Yeah. Even I feel that the casual vacancy appointee can be appointed for 5 years, but there is no clarity here. So we may have to go back to the rotation, we may have to go here and say, whenever an appointed auditor is appointed, it will be for 5 years. Got it? 5 years. Every subsequent appointment, 5 years. So in that category, you will go and you will claim. Okay. So the term of the auditor is fixed in 139(2) now, other than the first auditor. So anytime you are appointing a person, it will be for 5 years. Like you have to go there and link it with casual vacancy and say this is how it is. Right. So now we saw that at every AGM, just I don't see any clarity here in this section, so that's one must. Correct. He holds for 5 years as it is not mentioned or not prohibited. Correct answer. I'm very happy. Students are now slowly, getting into the groove, getting into the concept of understanding the provision and replying. Good. Now, a retiring auditor may be reappointed at an AGM if he is not disqualified for reappointment. So let us first understand. AGM. At the AGM, nothing happens. The auditor continues to be there. Then that guy is called retiring auditor. So at the end of the 6th AGM, at the 6th AGM, this man is the retiring auditor, because in this AGM, he is retiring. Either you have to appoint somebody else or you have to reappoint our man. But the retiring auditor may be reappointed at an AGM if he is not disqualified. He has not given the company a notice in writing of his unwillingness to be reappointed. A special resolution has not been passed at that meeting appointing some other auditor or expressly providing that he shall not be reappointed. So, if that means that he is automatically reappointed. Actually, this is a provision for automatic reappointment of a retiring auditor. If he is not disqualified and he has not given the company any notice, and the company has not bothered to pass a special resolution resolving that he shall not be reappointed or that other auditor will be appointed, then in the absence of another appointment or express resolution, see, think about it. Members are so unhappy with this bugger, they are saying, anybody but not this fellow. Such a special resolution has not been passed. Then the members don't mind if he is reappointed, so he will be automatically reappointed. This is subject, of course, to cooling off provision. Please understand. Cooling off provision is there. Even though all this is there, he cannot be appointed if the term of office is over and cooling starts. He cannot be. Since this new cooling off period is throwing a whole big thing on automatic reappointment. Okay. So, where at any AGM, no auditor is appointed or reappointed, the existing auditor shall continue to be the auditor of the company. That's why I'm saying, in case there is a cooling provision, I think that will have precedence over this. Because the cooling provision is a specific provision. So, only if he is otherwise eligible, he will continue. This should be how it is. But again, here there is no clarity. Suppose he has completed 5 years, you cannot appoint him. Now, another 5 years, he has to have cooling. So, you can avoid the cooling period by this method. Now, simply you keep quiet. Will he become automatically reappointed for 5 years? In my humble view, no. Okay, please. Okay. Yeah, whenever you appoint an auditor, it will be for 5 years. The period of office will be for 5 years. Okay. Where a company is required to constitute an audit committee, all appointments, including the filling of a casual vacancy, shall be made after taking into account the recommendations of the auditor. So now we come to another very, very relevant and very, very interesting provision, okay, which is removal of auditor. Removal of auditor. Before expiry of term of office. Okay. At the annual general meeting. In cases of fraud. 3 different categories. 140, very powerful section. Before expiry of the term of his office. At the annual general meeting, you remove the auditor and appoint somebody else in his place. And where there is a case of fraud, what happens like that? Okay. So these are three different provisions. Abdul, as usual, has some question. Let us see what it is. If an auditor becomes disqualified with your relative holding share capital by value more than 1 lakh before 30 days of AGM, can he give his consent on state of affairs as corrective action? Should be taken in 60 days. See, he is becoming disqualified by virtue of relative holding share capital face value more than 1 lakh 30 days before AGM. He has got 60 days time. So you are saying that at the AGM he will give his consent. All these questions are confusing questions. Okay, practical. Maybe one situation it might happen. In a million cases, one situation your case will come. So for that 1 in a million chance, I will give an answer. That is, relative is holding more than 1 lakh. This auditor is aware of it. And that idiot doesn't tell that wife or his brother to sell the share. In spite of that, it is there. Then when that reaches more than 1 lakh, he has 60 days. You are making the question so complicated that only 30 days for AGM. Now the company is asking a proposal, are you eligible? Can he give his consent on state of affairs as corrective action should be taken in 60 days? Sir, literally he can. See, practically, and practicality is something you will never understand in your life, Abdul. But for the sake of this academic question that you are raising, yeah, before the AGM, he can give his consent, sir. Because he still got 60 days. The vacancy will not happen for 60 days. But the company will be well advised because they'll be aware not to touch this fellow with a barge pole, to propose some other auditor. Why? Because, if I am the CFO of that company or board of directors, I'll call him and tell, look here, are you going to sell or not? No, I have 60 days like that. If he says, no, you have 60 days, you go in the corner and think, we are appointing other gentlemen before that. Because choice is with the company, Baba, for reappointment. Why appoint him? See, his period is getting over. We have to reappoint at the AGM. His wife is, some relative is holding more than 1 lakh. Fellow is telling, I got 60 days time, therefore you appoint me. Then after 30 days, what will happen? Suppose your wife does not sell the share, or then what will happen? You will become casual vacancy. Am I a fool to appoint you and wait for 30 days to find out what you will do and all? See, company is not fools. They will say, Baba, either you make it less than 1 lakh and send us a letter confirming that you are complying, or else go to the corner, I will appoint somebody else who is not having any problem. This is how the practical situation will be handled. But theoretically, if you are asking this type of question, answer given is, you can give his consent or that he is not. Then say, sir, you will appoint him in the AGM, sir. Then what happens? Another 30 days later, suppose the wife is still holding more than 1 lakh relative. What will happen? Fellow will disqualified. Then casual vacancy. Again, you have to go back to all this. Board of directors. Why all that? So, practically, it will not be encouraged. But theoretically, yes, you have wasted so much time typing this out. For that, I'm giving an answer. Theoretically, yes, he can give his consent on state of affairs. Okay, but I don't know how to express this to you. It's so impractical. In a real life case, also, if this happens now, that company would be the company secretary of that company will be very careful. He will inform the MD, sir, this fellow is dangerous. Another 30 days is 60 days, then another 30 days. If in case that is not reduced, it will become casual vacancy, board of directors, all that, blah, blah, blah. Do you want to appoint this fellow, or can we go for my good friend who is not having all these problems? Like that, he will bring a new auditor. Check it out. So, if I were this auditor, I wouldn't do this 60-day stunt. I wouldn't play the 60 days theoretical stunt. I would simply call my relative and say, hey, kindly sell that share, make it less than 1 lakh. Like that, I will say. Are you able to understand? And then come back and tell, I'm perfectly all right. Within 30 days, I will do it. Well, before the AGM, I'll do it. That is a practical answer I can give you. Are you ever going to understand such practical things, Mr. Abdul, in your life? Or only theoretical question you will ask? See, I'm again telling you, you can give your consent. You understand, Abdul? Far be from me any intention to enter with you in an argument. But it's very impractical is what I'm saying. If some auditor is giving such a clean thing, he's not wrong. Because going by your peculiar dates, he's got another 30 days. But at the end of the 30 days, if the disqualification comes now, it will become a casual vacancy. It will be more of a problem. Why I'm keeping on repeating this now, and you're also getting irritated, but don't get irritated. A man who is 57 years old, also he knows what he's talking about, has audited more than 600 companies. Man is talking to you. When he's giving you something very consistently, don't do this, don't do this. Try to think clearly and see, my goal is that you should become an intelligent member of the institute of my institute. You understand? Knowledgeable is different from intelligent. Are you able to understand the difference? You are knowledgeable, but intelligent is where you think clearly about what is practical and what is not practical. Beyond intelligence, this is not for Abdul alone. Now onwards, Abdul, ignore what I'm saying. I'm not talking to you. I'm talking to all my students out there. Clever people are there. Smart people are there. Are you able to understand? Knowledgeable people are there where they know the section, this what happens like this, sir, what happens like that, sir, what happens like this, sir. Knowledgeable people are there. Then you have intelligent people who will think clearly as to what is practical, good, long-term benefit, etc. That is intelligent. Lastly, you have wise people who apply wisdom, who really think clearly. And so ultimately, you all should become wise chartered accountants, not just knowledgeable or clever or smart chartered accountants. Go beyond that. This is not meant for Abdul. Don't react, Abdul. This is meant to all my students out there. Because intelligent people, not just knowledgeable people. Knowledge everybody can acquire by reading the book. Confusing questions can be easily asked, thereby displaying our knowledge or our cleverness. Going beyond the cleverness to becoming wise. This is not meant for Abdul Ji. It is meant for all of you. It is also a route to clearing the exam successfully. I am telling you, somewhere controversial questions, confusing questions only pull you into a confusion. Whereas clarity pushes you towards clarity. And the clarity comes automatically you move on. This is not for Abdul. This is for all of you. My humble submission to you all. So, Abdul, the way in which you write now, the tone is very important. So you can ask questions, but when the answer is given to you, don't react to it. 1. 2, understand that the question asked by you is an impractical question. It is not a wrong question. Okay? Given the provisions of the Act, your understanding of the provisions, etc., it is a very correct question. But it is a very impractical question. Rarely will we come across it in real life. If we come across it in real life, a mature auditor will see to it that the disqualification is removed well within 30 days before the AGM. A mature, wise, intelligent auditor will not get into the 60 days argument with anybody. He will simply resign. Either he will say, sorry, my shareholding is more important for me, bye. Or he will request the relative to reduce it and then confirm that he is that, so that there will not be any problem. This is the final answer I am giving you, Abdul. Okay. Continue to ask your great questions. I am learning how and all people can confuse with sections. Okay, good. So now we come to another very interesting provision. But before we get into this new topic, and since I have got into this huge unnecessary sideline with my good friend Mr. Abdul, let us give a small break for ourselves. Small break. The time now is 7:43. So hardly 2 minutes to 7:45. We will come back and then we'll take up removal of auditor. Let's have a small break for 10 minutes, which could begin, let's say, at now and go on till 7:50. Okay. Welcome back from your well-deserved break, when I hope you took some time off to, get something. Miss Arvinder Kaur has put a blank box there. Was that she wanted to ask any question? Anyway, welcome Arvinder, and nice to know. So, are you from Delhi or are you from somewhere else? Just to know, because names are, I generally like to play with the names and guess where they come from and all that. And sort of not visited everywhere in India, but by and large, I visited many places in India across the country. East, west, north, south. South, of course. North, yeah, a little bit. But there are still places. West and north, there are still places. Northeast, yes, a little more. I need to cover. Inshallah. Okay. Mera Bharat Mahan. So what is it, Arvinder ji? Is it something you want to ask me? No problem. Good show. Welcome back. And let's go to this very, very, shall we say, distasteful and delicate topic of removal of auditor. Okay. So suppose I had been an advocate or a company secretary, I will talk about this with joy and relish. But I'm a practicing chartered accountant, so I had to be very delicate while I handle this topic. And so when can an auditor be removed? Before the expiry of his term of office. That is, he is appointed for 5 years. Okay. Now you want to remove him beforehand. Good question. Before I conclude, Thakur asks, Arunachal Pradesh, I have not gone, yeah. Almost all other places I have gone. Arunachal Pradesh, I have not gone. Thanks for making me. Next year I will go. This year I went to Assam and I met a couple of rhinoceros and of course Manipur I've gone. Nagaland right up to Mokokchung I've gone. Assam of course, Guwahati, the Dimapur and all that. Meghalaya this time I went. Cherrapunji, Shillong, all that I went. Tripura I have gone, passed through Tripura. I went to Bangladesh and passed through Tripura and went to Assam by flight. All that. But Arunachal, yes, let's see. I would love to do that. Are you from that part? Then I would love to do that. Like to come there. Chalo, let's enough of this travel things and let's come to the topic removal of auditor before expiry of term. So we have this thing where we see, I've given the section numbers and rule numbers and all more for reference purpose, but I think in future I should give Board of Studies material reference, which is more important than section number for you. Okay. But if question is whether I should remember the section numbers, whether you should remember, whether I should remember, no, I did not remember because I'm not going to write your exam. Okay. But whether you should remember, yeah, it would be nice if you can remember. If you cannot, no problem. You will not lose marks because you don't. But if you remember and write, you will get additional half point, additional like that, some points. Where they would have given you, say for 4, 3 or 3.5. If you write section number, if you don't write section number, you will get 2.5 or 3. If you write section number, you will get 3.5 on 4. Chalo. So, you have appointed the auditor for 5 years. Now you want to remove him before the expiry of his term. For that, why you will do it? Because you don't like him. He's talking nonsense, wasting your time, not conducting the audit properly. Something. There should be some valid reason why you want to remove him. He is asking intelligent questions. He is not listening to bullshit I'm giving. He is asking me to produce evidence that I don't want to produce. For these reasons and all, you cannot remove him. Okay. If they're genuine, he's delaying the audit, asking unnecessary question, wasting my time. Those cases, yes, because illogicality and impracticality can go into the audit also. So you keep on asking the auditee, do this, do that, give me this, give me that, not convinced, keeping on, not believing the auditee. Whatever he does, you're not happy. Such cases, the audit will get delayed. So the auditee also will get angry. So the board of directors of the company will say, to hell with it. Let's chuck this guy out. So what they will do, a board meeting will be held to decide about removal of auditor appointed under section 139. Then board cannot take that decision directly. They will have to go to the central government, because, boss, removal of auditor, you can't decide. Then that means every board will come and remove every auditor. Just because, as he told, he's asking inconvenient question, he's not cooperating within courts, so you push him out. No, then auditor will have, that's a real independence threat. Are you able to understand? If the board of directors has the discretion to remove the auditor whenever they want, it is an independence threat. Because that threat will be there on this fellow, na? So that is not there now. You can remove. But before removing him, you have to file an application to the central government. That application is to be made in form ADT2. Okay, ADT means auditor. There's nothing great about that abbreviations. ADT. ADT2. Within 30 days of passing a board resolution. So you hold a board meeting. In that board meeting, you discuss all this. Then you send an application in form ADT2 to the central government. Central government here is our good old regional director. Don't worry about that. So that the regional director will be informed. See, now the idea is the regional director is supposed to protect us. He is supposed to be fair. So application to the central government will be there. Then within 30 days of passing a board resolution, it goes. Then you have to receive the approval of the central government. So before giving that approval, the central government should give the auditor a reasonable opportunity of being heard. So, Audi Altram Partem, Mr. One second, I'll just take the call. 1 second, it's very urgent. Please don't mistake me. I need to take this call, please. I'm extremely sorry. The person who called is the nurse who handles my mother. My mother is bedridden, so she has 24/7 nursing care. So one of the nurses called me now. So I need to. I took that call because whether it's an emergency for my father or mother. That is why I took the call. Nothing. There is no emergency. She was calling for some stupid reason. I told her to call back after half an hour. Okay. Sorry, when you have parents who are more than 80, this becomes an issue in your life. We have to take care. After all, they have taken care of us when we were young. So when they become old, it is our duty to take care of them. If you are busy and you cannot, at least you should ensure that they are taken care. Okay. So coming to the point, central government should give you an opportunity. My good friend, Mr. Aslam tells me, Audi Alteram means providing reasonable opportunity of being heard. Actually, no. The Audi Alteram Partem is a Latin term which means here. Audi means here, not Audi the car. Audi means in Latin, audit, audir. Audir in French is to hear, which is from the Latin root aud, which is hearing. So Audi means here. Alteram partem means other party. So the Latin rule given to the Roman judges is Audi Alteram Partem. Here the other party. Before you pass an order, when there are two parties in a civil dispute or any dispute, complaint, call the other party and ask what is the issue there. So the auditor should be given a reasonable opportunity of being heard. His side now. So after all, he can say, sir, they are removing me because I'm asking all these questions. Let them give the reply. So now the regional director, if he's a smart gentleman or lady, he or she should wake up. There's some problem here. Otherwise, this fellow, why should he? The auditor may say, sir, I said I will qualify 17 points. They are not happy. Now they want to remove me and put Mr. Donkey who will not qualify. Is that what you want? No problem. But document my objection and then you pass an approval order. Then with that, we will see where I will go next. So that will be that type of an opportunity should be given. And what is reasonable is minimum time. See, you can't send a notice today by email and say, come and meet me tomorrow. That is not reasonable. Everybody has their own affair. You can't say, come and meet me tomorrow. Otherwise, I will pass the order approval of 15 days minimum time. At least 7 days time should be given. Reasonable. What is reasonable will differ from case to case. Minimum 7 days, yeah. You have to give me to come to plan my affairs and come and meet you, give you the reasoning and all that. But it's still the RDs. See, there are two possibilities. Auditor could be a good man, unfairly removed. then RD will support him. Auditor could be an ass, wasting everybody's time, not having knowledge, simply asking questions. Audit is going mad. So that either way, a reasonable opportunity should be given to the other party. And then if still the central government is convinced that the auditor should be removed, they will approve the thing. Then once the approval has been received from the central government, you can remove the auditor by passing a special resolution. So some more protection is there. It is not enough if you pass an order resolution. You have to pass a special resolution. And that general meeting is to be held within 60 days of receipt of the CG's approval. So once you get the central government approval, so you hold the board meeting, within 30 days send the application, then CG will hear the matter. That will take its own time. Then the CG will pass an order and the auditor can be removed. Within 60 days, you have to hold a general meeting. And at the general meeting, you remove the auditor by passing a special resolution. This is the procedure for removal of auditor before the expiry of term. In fact, here I would actually appreciate the MCA. For once, you are going to hear me appreciating the MCA. Because they have given good protection for an auditor here. And the independence threat has been removed. So this is the one place where I will appreciate. They have been very intelligent. They have provided for removal of auditor before expiry, but they have given enough protection for the auditor to be sure that he is heard. So here we go with the answer, with the question asked in the exam. Okay. Sachidanand, Mr. Sachidanand was appointed as the auditor of Moonshine Limited on 19/9/2019. The company wanted to remove him before the expiry of his term. And for this purpose, the necessary board resolution was passed on 21/2020. The necessary application was made in form number 882. That also they're giving the question itself, okay, on 15/2020 to the central government. The central government approved the removal on 3/3. So when did they hold the board meeting? 21. Application on 15/2. So application should be made within 30 days. So 21 means 30 days means January, May, 21. Next day you have to start counting. 21, 22, 23, 24, 25, 26, 27, 28, 29, 30. Okay, that is 10 days plus 31. 1, 2, 3, 4, like that you have to count. So you will come to around 18th, 19th you will come when you have to remove him. 15/2 is good enough. Okay, the central government approved the removal on 3/3/2020. The company held its general meeting on 15/5/2020 and passed the order resolution for removal of the auditor. I think even 15/5 is well within the limit of 60 days. Fantastic. So 3/3 means again 2/4, no, 2/4/2/5, 60 days. Roughly 2nd of May. So it is, the meeting has been held beyond 60 days and you have passed a order resolution. Therefore, the removal is not valid. Okay. Good. Sachidanand's removal is not valid. Of course, if you want to definitely remove Sachidanand, again start the cycle. Have a board meeting, application, go to the central government. Sorry, I have done mistake. Please pass one more time order. I will do it. Then again 60 days. Then you can remove it. But this time, this removal is not valid. Okay. Good. Let's see. A lot of people are putting in special resolution. The removal is not valid. I think even 60 days is not covered. 60 days, within 60 days of the date of receipt of approval. So approved assuming that it was received on the same day also. 3/3 means 2/4, roughly 2/4/2/5. So on or before the 2/5 range, it should be held. 15/5 they have held it. So beyond 60 days. And also, Kavita ji, have you understood this? Then you know why it is not invalid. Now tell me why it is not invalid. What resolution they have passed there? Ordinary. Whereas what should be passed there? Special. When they should hold the meeting? Within 60 days. When they have held beyond 60 days. Therefore, not valid. Have you understood? Yeah. Not valid. Beautiful. AB and Associates, a firm of chartered accountants, was reappointed as auditors at the annual general meeting of X Limited held on 30/9/2020. However, the board of directors recommended to remove them before the expiry of their term by passing a resolution at a board meeting held on 31/3/2021. By then, these fellows have created so much nonsense problems, so better chuck these guys out, they have decided. Chalo. Subsequently, having given consideration to the board recommendation, AB and resolution are removed at a general meeting by passing a resolution subject to the approval of central government. No. Explaining the provisions for removal of second and subsequent auditors, examine the validity of removal of AB and Associates by X Limited. Now, in this question, there is one wording that you might find it a little nice, which you might want to understand. The provisions of removal of second and subsequent auditors. What do you mean? Why? Because the first auditor, at the expiry of the first AGM, he would automatically go. He would not be reappointed. Automatically, he would not be reappointed. Only subsequent auditor gets automatic reappointment. This fellow, the first auditor is out. Only second and subsequent auditors are eligible for reappointment, etc. So, how to remove them? See, this type of question, is a very interesting question. It is not only a practical question, it is also a theoretical question. So you have to explain the provisions for removal of second and subsequent. So what you need to do, correct answer is, you need to write the entire thing. That's all. You need to write the entire thing. Ideally, you write it in points. Bullet. So auditor mode. So in view of the above provisions, a removal of Messrs. AB and Associates at the AGM held on so-and-so by passing a special resolution is not valid. Like that, you have to subject to the approval of central government is not valid. Okay, so that way you will get full marks for this. If you write one line, the removal is not valid, like that, then you will not get full marks. Whereas here they are asking you to explain the provisions for removal. Again, they should have added one more wording before the expiry of term, but that's given in the problem. So no problem. Now we are going to talk about removal of auditor at the annual general meeting. Removal of an auditor retiring at the annual general meeting or appointing a person other than the retiring auditor. Appointing a person other than the retiring auditor or expressly resolving that the retiring auditor shall not be reappointed requires special notice. Right? Now, special notice is a topic that you will again study when you come to management and administration. Right? 115 will be covered again by the faculty who will cover management and administration. Nevertheless, since I have to use the term special notice, I am taking the liberty of covering it here. Section 115 is in chapter 7 of the Companies Act, not the Board of Studies material, Companies Act. Okay, maybe Board of Studies also chapter 7, but this is Companies Act chapter 7. I always refer only Companies Act, not to the Board of Studies material. Okay, so special notice is a notice given. So you should know what is a special notice. You already know what is a special resolution. Special business will come later, that you learn when you come to management administration. Now I'm only teaching special notice. Okay. So normally notice is given by the company to the members. Notice means knowledge. Whenever I give knowledge to you, it is called notice. When I serve notice on you, I'm giving knowledge to you about something. So normally notice of general meeting is given by the company to the member. But in the case of special notice, it is a notice given by the members to the company. Where any provision of the Act requires special notice, it shall be given in accordance with Rule 23. Section 115 read with Rule 23. That's what Section 115 says. Rule 23 gives the procedure. Special notice is required to be given only under two sections. One is here and the other is in directors. Room director. At an AGM and appointment of a person other than the retiring director. In the place of the director, so removed. Right? So that will come later on in your final syllabus. So only two sections, one section in intermediate, one section in final. We are now going to see removal of auditor, which is in intermediate, for which special notice is required. Special notice shall be given by such number of members holding not less than 1% of total voting power. 1% of total voting power. Or holding shares on which an aggregate sum of not less than 5 lakh rupees has been paid up on the date of the notice. So either 1 lakh, 1% or 5 lakh, whichever is less. So even if it is 5 lakhs, they can make. Or 1%, it's okay. Whichever is lesser, they can give special notice. 1%, members holding not less than 1% of the total voting power. That means 1 lakh shares. Total voting power is 1 lakh shares. 1%, 1,000 shares can do. If you are holding 1,000 shares, go ahead. You are having 1%, 1,000 and above, not less than 1,000, 1,000 and above. Or 5 lakh rupees, whichever is, say 1,000 shares, if it is 10 rupees each, 10,000, no problem. It's okay. But if it is much more, it's in 50, 60 crores, then you calculate 1%, it may be a big amount. Then 5 lakh is enough, whichever is less. So those members should send this notice to the company not earlier than 3 months, but at least 14 days before the date of meeting, at which the resolution is to be moved, exclusive of the day on which the notice is given and the day of the meeting. So you will get 21 days notice for the meeting. So the member will receive the notice of the meeting 21 days before. Clear this. Now you should serve the special notice. The members should serve the special notice not less than 14 days before. Minimum. Maximum 3 months. Suppose you have decided Mr. Donkey should not be the auditor. Remove him or appoint anybody except Donkey, like that. Monkey, not Donkey, or anybody but not Donkey. Whichever decision you have taken, you can deposit it 3 months, not earlier than 3 months. Why wait for it? So whenever they hold the AGM, special notice is already served. They have to include it in the agenda. Okay, whatever it is. Once the company receives special notice, the company shall immediately after receipt of the notice give its members notice of the resolution at least 7 days before the meeting. Immediately after receipt of notice, at least 7 days before the meeting, they should give. Again, they should give it exclusive of date of dispatch and date of. Minimum 7 clear days should be there. Right? So, this is a sort of a procedure. But suppose there are too many members, time is not practicable, then the notice may be published at least 7 days before the meeting, exclusive of date of publication in 2 newspapers, one in English and one in vernacular. So with this, special notice rules are understood. Okay. So if you want to propose that the retiring auditor, if you want to appoint a person other than the retiring auditor, appointing a person other than the retiring auditor. Donkey is the retiring auditor. You want monkey. Monkey, not donkey. Appointing a person other than the retiring auditor. Or expressly resolving that retiring auditor shall not be reappointed. Anybody but not donkey. Either way, they are saying we don't want him. Okay. I use the word donkey and monkey not in a derogatory sense, just as names. Don't take otherwise. Okay. Special notice is to be given for appointing a person other than retiring auditor, expressly resolving that retiring auditor shall not be reappointed. Okay. See, idea is you appoint anybody, Baba. I don't want to influence you, but not this gentleman. We are not happy with him. The members may be feeling that the auditor is having familiarity with the board, that he is not a sound person. Maybe there is some disciplinary proceeding against him. In spite of that, a board is appointing him. Known, he is not a good chap. Something like that. That's what I'm saying. That's why I said I have to take this topic with a lot of delicacy. Can a member of our institute be like that? Can we have members who are like that? But I think there could be, because human beings are there. Members of our institute are not God. We have to only take our members from human beings who pass the exam and who come, intelligent people, knowledgeable people, but may not be ethical. Therefore, we have to be careful. But what to do? So if that is how it is, then the notice has to be given. Members give the notice to the company. Immediately, company gives the notice to the members again, 7 days before the meeting. Then at the general meeting or at the AGM, the company can remove him if the resolution will be passed. That's all. See that there. Are you able to understand? But one important thing has to be done. That is, the company shall forthwith. Forthwith means as soon as possible. Please understand. Immediately is different from forthwith. Immediately means immediately. Forthwith means as soon as possible. But as soon as possible, it has to be sent. Send a copy thereof to the retiring auditor, who shall be entitled to make representation in writing of reasonable length. See, here again, who is the authority going to remove him? Earlier, we were going to get the approval from the central government. So there he got an opportunity to make a representation. Here, but once the central government has given an approval, no need for any further representation to the members. Here, directly we are going to the members. And the members are going to remove him. So, to that group of people who are going to remove him, the retiring auditor is entitled to make a representation in writing. He can say, I am a good man. This MD is a fraud. He is doing all nonsense. Because I am telling this, they want to remove me. Please don't remove me. Like that. Provided it is a reasonable length. He cannot simply write nonsense. The MD is a rascal. MD is a crook. Like that. Again and again without proof. See, but he may not have proof, or he may not want to reveal the proof. But he can say, I have got proof, evidence. I cannot reveal it now. Like that. Or he can produce the proof and evidence. He can say, I have gone through the vouchers. There is a siphoning of 3 crores during the project expenses. Bogus bills have been written. In spite of repeated requirements to produce correct, proper bills, they have not produced it. I have taken almost literally, I have done a forensic audit, let us say, and I have come out with the conclusion that 3 crores has been siphoned. I want to report it in Karo and report it. He doesn't want it. Now they want to remove me. Okay. Since I'm reporting it, they want to remove me. So the members may take a call. Whatever it is, any representation should be circulated to members if so required by the retiring auditor. Unless the representation is received too late, then it has to be read out at the meeting. And all notices given by the company to members shall mention the fact of representation. Right? But here you have to be a little careful. See, clear 14 days means days excluding notice given. Okay, Aslam, thank you. Don't keep repeating the provisions. If you have a question, you ask it. Sometimes I get a little irritated when you repeat a provision because I'm wasting my time reading what you've written there. According to this provision, Board of Directors cannot change the auditor, but only members. At the AGM, please read the top. Please read here what it says. At an AGM. Even here, members do not have the power. Even here, even here, board does not have the power. Only members can remove, but board initiates. Here, in special notice is given by 1% or 5 lakhs. That initiates the process. See, in this case, the board is happy with this fellow. They want to keep him. But some of the members feel he is a crook. The auditor, they want to remove him. Whatever. Okay. So, members only can do it. No way. Only board cannot remove. No way. Only casual vacancy, board can appoint. Okay. First auditors, board can appoint. Board cannot remove. No way. If the board can remove at its discretion, then there will be no independence. Every board will hold the auditor in thrall and threaten. No. Board has nothing. You see, you have to be friendly with the board. You have to respect them. Basic human courtesy of being courteous is there. Other than that, you are not bound to obey these fellows because you are the auditor. Don't ever forget that. Okay. See, once you realize that your power now as an auditor and your ability, automatically independence will come. You will stand tall. You will lift your head. You won't behave like that. Okay. No working days and all. Only all days are included. Sundays, everything. No clear, it doesn't say working days. Clear days, that's all. No working days. Only working days and all. No such condition. For 21, for 14, for 7, no such condition. Okay? Got it? Anyway, you will learn more about this when you come to management and administration, where you can ask beautiful questions to that faculty. If a copy of the representation is not sent as aforesaid because it was received too late or because of the company's default, the auditor may, without prejudice to his right to be heard orally, require that the representation shall be read out at the meeting. So the auditor sent it, but it came a little late. I'm saying we cannot. Then he can say, I will be heard orally. Means I will come to the AGM and talk. I will address the members. In addition to this, you have my representation read out. This is you can say this is a right of the auditor to be removed. The retiring auditor who is going to be replaced at the AGM. See here, strictly speaking, you should not use the word removal because anyway he is retiring at the AGM. What you are doing is you are not reappointing him. You are appointing somebody else or specifically saying you will not be reappointed. That is all you are doing. In a way, you are not removing him. But even there, he has an opportunity to make representation. Right. But if a copy of the representation is not sent as aforesaid, you will at least file the copy with the registrar so that it becomes a public document. But think about it. The auditor making the representation is enjoying what is known as qualified privilege. Friends, slightly legal issue here. It may not be very important, but for information. Yeah, sometimes, we may use defamatory statements. What is a defamatory statement? When you say something about me, which will reduce my respectability. It's called defamation. Suppose you go around telling, that Sri Gandhi is a rascal, like that. If you tell, that is a defamation. Provided it is the truth, then it is not defamation. But suppose I am a genuinely honest person and you are telling something bad about me, that is called slander, defamation. If you put it in writing and post it somewhere in the blog and all, that is libel. I can file a civil suit against you and claim damages. My lawyer will send a civil notice, not my son obviously. I will hire another lawyer to send a notice and I will say claim damages because I have a reputation. You prove what you said. If you cannot prove what you said, pay me 50 lakhs. Like that I will claim damages, whatever. Let the court decide. I will claim, my lawyer will claim 50 lakhs. Then the court will finally decide 5 lakhs means 5 lakhs you have to pay. So this is called defamation. So now you are not supposed to tell bad things about people and put it in writing, put it in social media and all. Okay? Please control this urge. Sometimes, social media, Facebook or blogs and all, you write some nonsense about people. Don't do that. If that man is not a good liar, you are out. They see to it that you are screwed by claiming damages. Okay, if you are in US, it will happen automatically. In India also, slowly this law of torts is picking up. Now, the auditor in his representation may be making certain defamatory statements. But so long as it is genuine and he is not abusing that privilege given to him, then it's okay. But if the tribunal is satisfied, either on application of the company or of the aggrieved person, that the rights conferred by this subsection are being abused by the auditor. See, this section is giving him a right, but that right cannot be abused to write all slanderous nonsense about the MD or other directors. So, where it is abused by the auditor, then the copy of the representation need not be sent and the representation need not be read out at the meeting. Right? Fantastic. Now, we saw Sachidanand. Now, Nityanand. So today only Ananda. Of course, Nityananda is a famous guy. Mr. Nityananda is the current auditor of Mrs. Delight Food Products Limited. He is retiring at the next AGM when he would be completing 2 terms since his first appointment. Right? Nityananda. The company has a paid-up capital of 5 lakhs consisting of 50,000 shares. Members holding 700 shares have sent a special notice. Okay. In accordance with section 115. proposing specifically that Nityanand shall not be reappointed. The board complied with section 115, and the next AGM, Mr. Nityanand was not reappointed, and in his stead, Mr. Brahmanand was appointed. Now, Mr. Nityanand claims automatic reappointment. Is this valid? So, Nityanand was not reappointed. In his place, Brahmanand was appointed. Now, Mr. Nityanand says, no, you read the Companies Act here. What are you? You are not aware of the law. I am automatically reappointed. Because, see, you have not removed, that is why, if you remember, for this, you have to go back for automatic reappointment. What did we say? A retiring auditor may be automatically reappointed at an AGM if provided a special resolution has not been. So in this case, Nityanand is not disqualified. He has not given a notice in writing, but a special resolution has been passed at that AGM, appointing some other auditor, Brahmanand. Okay. So that being, and special notice was given, everything was complied with. Therefore, appointment of Brahmanand is valid. Nityanand cannot claim automatic reappointment. Got it? So, the next topic is removal of auditor in cases of fraud, etc. Okay. Now, this is a situation where there is a fraud. Now, tribunal can suo motu take up the matter. Suo motu means on its own motion. Mr. Aslam, suo motu means on its own motion. So on its own motion, it may become a place, or on application by the central government. Okay. Or on application by any person concerned who feels that the auditor is, what are they trying to say? Either tribunal on its own motion is satisfied, or on application by central government, or on application by any interested party satisfied that auditor has directly or indirectly acted in a fraudulent manner or abetted or colluded in any fraud by or in relation to the company or its director or officers. This is a classic Satyam Nijat, because in Satyam case, the auditor was absolutely, he was acting in a fraudulent manner, abetting, colluding in the fraud by this great Ramalinga Raju and other directors, including the so-called independent directors of that company. They're conniving. All of them were put jinka for the Ramalinga Raju. So that is in those cases, earlier there was no punishment for the auditor in the law. All that you could do was you could complain to the institute. Institute will take disciplinary proceeding, debarring, all that. Then you can take criminal proceeding, all that. And that too, even to take criminal proceeding, you have to go under CRPC. Except, right? So long-winded procedure, that will easily purchase everybody and come out. But now the power has been given to the MCA to apply. And tribunal will pass the order. So that it will direct the company to change its auditors, and the removal auditor shall not be eligible to be appointed as auditor of any company for 5 years. And please note it, he will be liable for action under section 447. Do you remember 447? Cases of fraud, huge penalty, unlawful gain has to be repaid. Suppose he has colluded with the directors and got unlawful gain, fees and all is unlawful now. All that has to be refunded, given. In the case of a firm, the liability shall be of the firm and that of every partner or partners who acted in fraudulent manner or abetted or colluded in any fraud. Even in case of LLP, those partners who acted in fraudulent manner will be liable. Other partners will not be personally liable. But the firm will be liable. Firm will be liable. Those partners who are guilty will be liable. But other partners who are innocent will not be liable. Okay, which is good. Or in relation to the company or its directors or officers. Auditor includes firm of auditors. So, any firm where this fellow is a partner, that firm also is liable. And that partner who has done this, but other partners who are not liable, who are not guilty, are not liable. This provision, and also where the application has been made by central government, if the tribunal is satisfied within 15 days of receipt of application, it shall order that he shall not function as auditor and the CG may appoint another auditor. So, where the tribunal is satisfied within 15 days of receipt of application, it shall order that he shall not function as auditor and the central government may appoint another auditor, not even the company in this case. Because after all, the company only has appointed this fellow fraud. And the company is also fraud. So they cannot appoint. Central government only will appoint. Okay. Where the other than central government, if it has happened, then the tribunal will say, change the auditor. And the removed auditor shall not be eligible to be appointed as auditor of any company for 5 years. Any company for 5 years. And liable for action under section 447. Nice provision. I am not against the provision, but it's a clear knee-jerk reaction from Satyam. Okay, I don't, after that, how many companies they might have used, I do not know. Stringently, they might have, there are examples where there have been mismanagement, fraud, I don't know, could be. Okay. Sir, LLP, the firm is liable, only the partners enjoy limited liability. Limited liability partnership means the partners' liability is limited. The firm's liability is unlimited. In the sense, it has to pay whatever it is due. The partner's liability is limited. Are you able to understand? In this case, the firm's liability is there, plus the partner who is guilty is liable individually. This section is making that partner individually liable. Firm is anyway liable. No partner is normally liable. Only the firm will be liable because it's a limited liability partnership. So they say firm is liable. Any other partner who is fraudulently acted or abetted or colluded is also personally liable. Okay, got it? So Mr. Paramanand. So we saw Sachidanand, Nityanand, Brahmanand, now Paramanand. Paramanand. See, all these fellows are doing all activities which will give Anand for a short term, but not for a long. They are not, it is not Nityanand. Only ethical behavior will give you Ananda forever. Okay. Ideally, you get yourself detached. That will be the ultimate Anand. But if you still want to be part of this type of things, then at least be ethical, honest, straightforward. You will enjoy real happiness rather than Ananda only for a short time. Okay. So what happened to this fellow Paramanand? He is the auditor of Fly-by-Night Operators Limited. He discovers that the directors have quietly siphoned away the funds of the company through false bills and unauthorized fund transfers. He colludes with the directors and issues a clean audit report for the year ended 31st March 2019. Examine the legal consequences. This is a theory question, not a problem. Answer is content of this slide. You just have to remember this slide and write it in the form of a points. That is all. Consequence of that. No, he should be holding in that subsidiary. Only then he can send. This 1% should be in the subsidiary. Only then he can send. He cannot send special notice for subsidiary if he is holding 1% in holding company. Okay. Good. So we have come to a very nice logical position. So where we will be moving to resignation in the next class. Okay. Thank you. Have a great evening ahead and looking forward to meeting you on Monday, inshallah.